So as an introduction, just really ask yourself this one simple question. If there really was a program to eliminate most of the interest in your life, pay off all your debts, even that mortgage, in as little as 5 to 7 years, you don't have to refinance, you're not changing your lifestyle. I mean, is that something you'd want to learn more about? Most people say, heck yes, just like you see there. And sometimes people, what's the catch? Sounds too good to be true. And I get that. Please know I felt that way too. When I took the time to understand more, I realized this is an incredible program and system that made a massive difference for my family and I. And I hope it can for you as well. So the Money Max account was created by United Financial Freedom. Helps people pay off all their debts in as little as 1/2 to 1/3 of the time. No change to your budget, no debt consolidation, no negotiation, no refinancing, no second job needed. It's just math. What I'm going to show today is a brief summary as an introduction. Please note, learn more. Maybe someone has shared this video with you. Maybe this is the first time you're learning about it. Just learn. We have about 80,000 clients. Over $2 billion in debt has been eliminated for our clients. Close to $10 billion under management. And as far as the credibility goes, I put this on the screen. Listen, Ernst & Young gave the founders of our system, John Washenko and Skylar Whitman, what's known as the Ernst & Young Entrepreneur of the Year Award. Now, for those that don't know, Ernst & Young is one of the largest financial firms in the world. They give this award out every year. And for the first iteration of our program, now we're on releasing version 6 coming up soon, okay? But for the first iteration, it won this award. And then there's been massive, write-ups and featured different publications like Personal Real Estate Investor magazine, Broker Banker, which is a mortgage magazine, Mortgage Planner, True Wealth, and others. This system works. This program works. Now it's just a matter of, is it right for you? And that's what you need to figure out, right? So what do you need to use this, right? There's all these other debt elimination strategies out there, using HELOCs or infinite banking or different kind of strategies. You know what's so neat about this? Yes, you can use all that as well, even with our program. Okay, it can capitalize on those type of strategies, velocity banking, things like that. But you know what you need to use this program and what most of our clients get started with? A checking account and a savings account. And if you can commit at a minimum 15 minutes a month, follow our coaching, because you get coaching with us, you get steps, you get guidelines, you preferably weekly to update a platform that you get as a client, but at least 15 minutes a month, you can have success using the system. Credit scores don't matter at all because you're not refinancing or consolidating or anything like that. And this is for all of your debt. So with a checking account and a savings account, some people even use 2 checking accounts, okay? Another account that we classify in our program as an offset account. Any debt, mortgages, student loans, credit cards, business debt, lines of credit, 401k loans, whatever, can be eliminated quickly, strategically, and you can make a massive difference in your life. And I want you to think about that for a minute. If you were debt-free, as quick as possible, what does that mean to you, to your family, to your legacy? What does it mean to your stress? What does it mean to your life? Maybe retiring early? It is possible. There's a proven system that has been working now for so many clients. So what is this not? And I think this is important. It's not one of those bi-weekly payment plans. Some people don't even know what that is. It's not a refinance. We're not making you, every month send in extra money. Okay, I already said this. It's not a loan modification or debt consolidation. We don't control your money. There's no accounts needed. account numbers meaning, sorry, no social security number needed. And yes, nobody has access or control of your money in any way. We have developed a program and a guide to put you on the perfect mathematical path to achieve all the goals you need to eliminate as much interest as possible and get you on your way to debt freedom. So one of the things we love to do is really educate you and show you the truth so that you understand a little bit of, now remember, this is a high level, and I'm gonna go through this quickly, but this is something that really hits home with most people. Listen, a lot of people have mortgages, right? But I know you have student loans, credit cards. I'm using a mortgage as an example, and I'm using that 3% loan as an example. It's like free money, right? We hear that over and over and over again. The banking world has us so conditioned to think of things a certain way, and we don't even pay attention to what's really happening. So this is your mortgage payment, $1,560. Okay, $1,560. Now that's not including taxes and insurance, but that's just the amortization schedule. And by the way, mortgage. The word mort from Latin means death. And there it is again in the word amortization. All right, it is a pledge of death, a schedule of payments. Now the banks say, hey, 3% loan, right? Great rate. We are so conditioned by the banking industry to focus on rate and payment, rate and payment, rate and payment. Look at what's really happening. Okay, out of that payment in month one, $925 goes to interest and $635 is going to principal. How is that 3%? See, the banks have what they call a loan schedule, not just for mortgages. I'm using a mortgage as an example, but the way interest is calculated on a loan matters. Not just the rate and payment, but the way. How are they calculating the interest? In this example, it is completely front-loaded. Now, there's a reason for that. All the data shows, all the analysts at the banks know this, that the average consumer is going to stay in this mortgage, all the data shows them this, 5 to 7 years. Why? You're going to move, you're going to refinance, right? Maybe cash out to pay off some other debts, but you're going to start this cycle over and over and over again. Sometimes to get that better rate and that better payment, well, you dropped it by $200 or so, right? People do this all the time. And they dropped it by a half a point or a point. But in reality, what's really happening, if you look at your truth in lending statement on a loan, there's something on the bottom of it called the TIP, stands for total interest percentage. You see, that is what the banking industry actually capitalizes on. The TIP means how much interest are you paying compared to the principal, the volume of that interest on these payments. That's what they care about. Why? Because this is a 3% amortized. And remember, that word mort is in there, which means death. It's a death pledge. They know that you're most likely not going to stay in this loan for 30 years. And if you stay in this loan for 30 years, then yes, it is a 3% amortized loan. But we don't do that. We move, we refinance, we get our next house, whatever it may be. And they know that. So if you're starting that cycle of debt all over again, every 5, 6, 7 years, do you ever get to 3%? Now I want you to really think about the math of this. The real effective interest of this. How much interest have you paid compared to the principal? Even after 6 months, I want you to look at this loan schedule. Feel free to go to Google, put in amortization, of a loan, put in 3%, 30 years, 370. In any other realm, if I was, let's say, your financial advisor or someone giving you financial advice there, and I said to you, hey, I got this new program for you, and I want you to give me $1,560 every month for the next 6 months. So after 6 months, I've given you $9,360. and 55.26 will be my fee for this. And 38.34 is what, don't worry, we'll make sure that goes to the principal of your new investment or your new, whatever you're, putting money towards. In any other realm, would we accept that as okay? I'm sure you're saying no. So why do we accept it with our debt? Well, the old golden rule of banking, right? Those who have the gold make the rules. And this is a loan, and the bank has their schedule, and the bank has their rate, right? They're giving us the money, but it doesn't have to be this way. And it has to do with the way the interest is mathematically calculated. You can help this. And I'll get into this in a second for you, okay? But please know that great rate and great payment, here's just an example, but think of your other debts, your car loans, your credit cards, your student loans. Look at the interest volume compared to the principal, not just the rate and payment like the banks want you to. And effectively, you can mathematically help yourself in a very big way. Now, there's only one way. Somehow, you have to affect the principal of the balance of the loan sooner rather than later. But if you do it the right way, you can eliminate a whole lot of interest without changing your lifestyle at all. Every penny matters. Your income matters. Your expense matters. Your due dates matter. Your interest rates matter. But also, how the interest is calculated matters. So remember that, okay? And just to hit home a little bit, I mean, even after 5 years on this loan, you've spent $93,000 so far, and $52,000 of it went to interest. You don't hit the halfway mark on this loan as far as the principal balance until year 19. But you've moved or refinanced probably a couple times before that even happened. And the banks know that too. So they front load this loan with as much interest as they mathematically can and just expect us make that payment, make that payment, make that payment. It doesn't have to be that way, okay? So the effective rate on this loan is 34%, the tip, if you will, the amount of interest you're paying compared to the principal you borrowed and paid back. That's insane, but we just kind of accept it. Again, we've created a formula and a program that you don't have to anymore, okay? Just to kind of hit home, this is a real example from a client of mine. They sent it to me of their truth in lending disclosure. And if you look, this is the amount they financed. Look at that great rate, 2.659. But on the total interest percentage, the tip, 42%. Clear as day, everyone, in black and white. But we just kind of ignore it. Even those at the closing table say it is what it is. You borrowed $396 if you stay in this loan, which you may refinance a couple times or move and start the cycle all over again. The amount of money that you're giving to interest is crushing your future. It is destroying goals and families. We've created a program that is making a massive difference. I told you, I'm saving over $200,000 in interest and 25 years of mortgage payments and other debts too, gone. Join me. So how do we do it? Well, we created a program. When I say we, John and Skylar, our founders, that everything matters. Formulas matter, timing matters. Do you get paid weekly, bi-weekly, once a month? Due dates matters. What kind of debts do you have? And all it ever cares about, it looks at your checking account, your savings account, credit cards, lines of credit, cash accumulation accounts for those that understand like cash value life insurance policies. It looks at everything. They spent about $20 million, hired some engineers, hired mathematicians, some program developers, and went to work. And they took your flow, the client's flow, frequency, timing, due dates, the types of accounts you have. Why? Interest is calculated differently on every single debt you have. There's different, due dates, there's different types of debts. The way interest is calculated on a loan, it's not the same as the way interest is calculated on a credit card or a line of credit, cash value life policy. So everything matters. And what they developed was a program that looks at every penny doing something, actually working for you, either earning interest or canceling interest. If I told you that there was a mathematical perfection that gives you the perfect mathematical path, and we developed an engine that is constantly recalculating, that always works, that always shows you the perfect math to eliminate as much interest as you can, even set up savings or wealth building in it if you wanted to, and eliminate the debt as quickly as you possibly can with the cash flow, the frequency and timing that you already have, and without changing your life. Would that be a good thing? We developed a program that does that, and it's incredible, and it makes such a difference. So I'm going to use another example here for you, okay? Same exact mortgage. Now, listen, this just says just an example, okay? I'm just using this. Most of our clients, I will tell you, get on our program with a checking account, and they use a savings account as an offset account, okay? And you'll learn more. I implore you to learn more. But just to prove a point, just to let you understand the way it's not just about the rate and payment. It's not just about what the banks want you to focus on. This is our sample client. Let's call them John and Rebecca Jones. Same exact mortgage before. And that question on the top is, hey, is it smart to take out a 10% loan to pay off a 3% debt? Most of you will say, no, well, of course not. 10% is so much worse than 3. Right. That's exactly the trap of the mindset the banking industry wants us to feel in. We are so conditioned to focus on rate and payment, rate and payment, rate and payment. Well, the real answer is, well, actually, I don't have enough info yet. What type of debt is that? Is it a 5-year loan, 10-year loan, 30-year mortgage? Is it a credit card? Is it a line of credit? Is it a loan from my insurance company? What is it? So what we developed was a way that you can mathematically understand how every penny matters, and it looks at the rules of every single account that you have, and all it cares about, like a GPS system in your car, is constantly recalculating your path. If you make a wrong turn, it recalculates. This system is constantly recalculating the perfect mathematical path, like a mathematical engine, to eliminate as much interest as you possibly can, stay focused on the goals that you have, because life happens, right? Things come up. And this system is constantly showing you. It is the most advantageous cash flow management program I have ever had. It has made such a difference for me to make the right choices, because I can put things in the future and see how it's going to affect me before I even decide to do it. It's great. So that being said, is it smart to take out a 10% loan to pay off a 3% debt? Don't know yet. Well, John and Rebecca Jones had that same mortgage I just showed. And I showed you the effective rate of interest there. It was crazy, right? It's really not 3%, right? The tip is so much more, total interest volume or total interest percentage. So let's say they make $7,000 a month, but they spend $69.50. Well, they're just getting by, aren't they? And this is just to show you an example of what the system may tell the client to do. Now they're using their checking account and they're using their savings account. Their money comes into the checking account, they pay their bills, nothing's changing. But John and Rebecca Jones happen to have a special line of credit, let's just say, from their local bank or credit union or something. And the system recognizes that. The system wants to use that, okay? And it says, wait a second. Today's, let's say it's the January 15th or some amount of time throughout the month. And it's looking at everything. Their their income, their expenses, their due dates, their future expenses. Like a GPS system in a car understands the perfect path to your destination. And when you turn off the road, it recalculates, turn a different way, it recalculates. This is looking at everything holistically, all their accounts. And it says, hey, actually the fastest mathematical solution without affecting their lifestyle. Remember, they make $7,000 and they spend $69.50 a month. They don't really have much left over there, right? They wouldn't figure out a way to pay off debt quicker. They're just getting by. But the Money Max account was designed to look at every variable and just give you a path. So it says, you know what? Hey, today, based on everything you've done and everything you have coming for the next 20 years, who cares? We want you to go ahead and take $31.99 from this line of credit that they have over here at 10%. Borrow that, which is $26 of interest this month. Okay? And the reason it's saying do that is go ahead and apply it to the principal of that loan. Now, right away. Now, one of you is thinking, that's watching this right now, say, whoa, Brian, stop. You just went into more debt. No, you didn't. Your debt is exactly the same dollar amount. You owed $370. You took $3,199 away from this, and you just put it over here. But Brian, that's more interest rate. Yes, but the program understands mathematically the way interest is calculated on this little debt over here is completely different than the way interest is calculated on a mortgage. See, the way interest is calculated on a line of credit, and you don't need a line of credit, please. Most of our clients do this with their savings account, okay? Mortgage, payments come in, their income, pay their bills. They're going to transfer some money into a savings account to build up kind of reserve. It's going to use it. But I wanted to open up your mind a little here. So if that's what it's telling them to do, why? Well, let's think about this. The way interest is calculated on a mortgage, and again, I'm just using this as an example, it is front loaded with all this interest. See, it took this month away, and this month of interest, and this month of interest, and this month of interest, and this month of interest. They just saved $4,600 of interest. And it took 5 mortgage payments off the back end of the loan. See, a lot of people don't get this. It took 5 mortgage payments off the back of the loan, but the interest came off the front end of the loan. See, when you apply more money to the principal, which is what that just did, it jumps you ahead in that loan schedule. So overnight, you just jumped ahead 5 mortgage payments. You still have the mortgage payment due next month, but it's for March, right? March down here, not October. And you just canceled all this interest. So what happened? Well, in reality, for this example, you rob Peter to pay Paul. Why would you do that? Because Peter charges you less interest. I want you to think about it. This client is spending $26 a month in interest to cancel out $4,600. Now, someone's gonna say, well, Brian, you still owe that money over there. Yeah, it's $320 a year in interest if you never pay it off. That's not what's happening. This was a strategic allocation based on the client's, John and Rebecca's, cash flow and income and expenses. Their lifestyle did not change at all. Yet they just took 5 months of mortgage payments off their debt like that. How many times do they want to make that trade? Even if they never paid this off, this $31.99 here, that's not what would happen, because that was a strategic move and they're going to pay it off. But even if they didn't, do you realize at $26 a month in interest, when this doesn't make sense for this specific example, they've canceled $4,600. they had to pay $26 to do it. They didn't change their lifestyle at all. When it doesn't make sense is when $26 of interest on this line over here, and it could be a credit card, it could be whatever that is over there, equals 4,600. Please know that's 14.75 years later. They're going to be debt-free by then already. Our average client is completely debt-free in about 5 to 10 years. We say in as little as 5 to 7. I'm just like that. I've used this program over and over and over again on so many different properties and debts. I've saved hundreds of thousands of dollars in interest just by using it and incorporating it. So, as a summary, I'm doing the very basics. There are 3 different types of offset accounts that you'll learn about as you become a client, as you learn more. But every client typically starts, most clients I'll say, right here. They use their savings account first. Okay? That is what most people do. And then sometimes, they graduate, I'll say, into using like a line of credit of some sort. Then there is a way, and you'll learn about it later, but that you can create arbitrage to eliminate debt and build wealth simultaneously on the same dollar. We'll learn about that later, okay? But know that most clients get started with a checking and savings account. That's the way we perfect it. We let you get used to this. And then if you want to take it a step further, kind of turbocharge this, you absolutely can. But what is this system really doing? It is looking at everything. Just like a GPS system in your car is constantly looking at all the different ways of getting somewhere. And when you make a turn, it recalculates. And you plug something else in, it recalculates. And you want to get something to eat, it recalculates. And there's a bridge that goes down, it recalculates. And there's a bad accident, it recalculates. I want you to think of that, but for your cash flow and your life, because things happen. Lives happen. People have a goal, like they want to be debt-free, and then things happen. Life happens. They got to buy a new car. They have a medical bill that happens. We have the perfect mathematical dashboard that shows you the path and keeps you on path because things come up and things happen. Okay, so this is a sample. We actually have an upgrade to the system. It looks a little different now, but this, as you can see, step-by-step guidance. Okay, you get a coach. That's part of what once you become part of the family, you are part of the family. You get success coaching, you get guidance, you have meetings with them. We can help you, strategize and talk through different choices and what that looks like, and really get the help you need. That example I gave you, listen, yeah, that showed a little line of credit and stuff, but most of our clients do with their savings account. I just wanted to whet your appetite a little bit. Get your demo, learn more, see what this can do. You can even watch, there's another recording of a demo of me going through the program. I highly suggest you see what this can do for you, make a difference. And then maybe you'll even share it with others and make a difference for them too. We would love to have the opportunity. Either myself or get with the person showing this to you. And let's take those next steps. It's free to get the analysis done. It's complimentary to understand more. And that's all we're talking about here. Thank you for your time. I hope that this was a little bit enlightening. And let's get you to learn more. Thanks now.